Hi, I'm Emily Carter, and on this channel we don't chase hype, we follow cash. Most investors today are running after the next big story, the next company that promises 5x or 10x returns. But quietly, in the background, there are businesses that don't promise explosive growth. They simply generate money and send it back to shareholders. Today's company isn't a trillion-dollar giant, and it's definitely not a social media favorite. We're talking about a gold producer with a market value of roughly $120 million, operating in the US, generating real revenue, real free cash flow, and paying real dividends. In a market where many miners are still burning cash, this one is actually producing gold, selling it at prices near $1,900 to $2,000 per ounce, and turning that into distributable income. So this video is not about chasing the next moonshot. It's about understanding how a small, disciplined company can convert commodity prices into steady cash. If you care about cash flow, dividends, and downside protection rather than hype, you're going to want to stay with me. So let's talk about the company itself. Fortitude Gold Corp, trading under the ticker FTCO, is a US-based gold mining company operating almost entirely in Nevada, one of the safest and most mining-friendly jurisdictions in the world. This is not an exploration company hoping to find gold someday. This is a producer that is already pulling gold out of the ground and selling it into the market today. Fortitude. Gold's entire strategy is built around staying small, focused, and profitable. With a market capitalization in the range of $100 to $150 million, this is clearly a micro-cap company, but that size actually works in its favor. Instead of managing massive capital-intensive projects, the company focuses on shallow, high-grade deposits that can be developed with limited upfront spending and much faster payback periods. What really matters here is that FTCO doesn't rely on constant debt or share dilution to survive. The company has historically operated with little to no long-term debt, and its revenues, which have reached roughly $20 to $40 million annually in recent years, are generated from active mining operations, not financial engineering. In other words, this is a real business with real operations, and everything else in this story starts from that simple fact. What makes Fortitude Gold interesting isn't just that it produces gold, but how it produces it. The company deliberately avoids massive multi-billion-dollar mining projects that take 10 years to develop and require constant access to capital markets. Instead, FTCO focuses on small, shallow deposits that can be brought into production quickly and operated at relatively low cost. Because these mines are near the surface, extraction costs stay under control. Fortitude Gold has been able to keep its all-in sustaining costs below many industry peers, allowing the business to remain profitable even when gold prices fluctuate. When gold trades around $1,900 per ounce, the company still maintains healthy margins, and when prices move higher, that margin expansion flows almost directly into cash. This model creates a very different risk profile compared to larger miners. FTCO is not betting the company on a single mega project or future discoveries. It's focused on generating cash today, reinvesting selectively, and preserving capital. The result is a business that prioritizes efficiency over scale and discipline over ambition, which is exactly why it can support dividends despite its small size. Now let's slow down and look at the financials, because this is where Fortitude Gold really separates itself from many small miners. Over the past few years, the company has generated annual revenue in the range of $20 to $40 million, and more importantly, a meaningful portion of that revenue has translated into positive free cash flow. This matters because FTCO isn't just showing accounting profits on paper. The business has actually been producing cash after operating expenses and capital spending. In several recent periods, operating cash flow has reached the high single-digit to low double-digit million-dollar range, which is impressive for a company with a market cap of around $120 million. Another key point is the balance sheet. Fortitude Gold has historically operated with little to no long-term debt, meaning the cash it generates doesn't get swallowed up by interest payments. Instead, that cash can be held on the balance sheet, used to sustain operations, or returned directly to shareholders. In a sector where many peers rely on dilution or leverage to stay afloat, FTCO's financial profile looks unusually conservative and resilient. This is where Fortitude Gold really stands out, especially for income-focused investors. Unlike most small gold miners, FTCO has made dividends a core part of its capital allocation strategy. The company has consistently returned cash to shareholders, with annual dividend yields that have often landed in the 6% to 10% range, depending on the stock price and gold market conditions. What's important here is not just the size of the dividend, but the source of it. These payments are not funded by debt, and they're not supported by issuing new shares. They come directly from operating cash flow generated by selling gold. When a microcap miner can pay dividends out of real cash while staying largely debt-free, that tells you a lot about management's discipline. At times, Fortitude Gold has paid out several $1 million per year in dividends, which is a meaningful commitment for a company with a market value around $120 million. This approach turns FTCO into something very rare in the mining sector. A small producer that behaves more like a mature cash-generating business, rewarding shareholders not with promises, but with actual quarterly payments. Now, it's important to be realistic, because Fortitude Gold is not a perfect or risk-free investment. The company operates primarily in a single region, Nevada, which means its production and cash flow are tied to a limited number of assets. If there are operational issues at one site, the impact on overall results can be significant. There's also the question of reserve life. FTCO is a small producer, and its proven and probable reserves are not measured in decades. That means the company must continuously manage production carefully or bring smaller projects online to sustain output. Without that discipline, revenues in the $20 to $40 million range could decline over time. And of course, gold prices matter. While the business remains profitable around $1,800 to $1,900 per ounce, a prolonged drop toward $1,600 or below would put pressure on margins and cash flow. In that scenario, dividends could be reduced or paused. So while FTCO offers income and stability relative to many microcap miners, investors still need to understand that this is a commodity-driven business with real cyclical risk. So the real question becomes, who is Fortitude Gold actually for? This stock makes the most sense for investors who care more about income and capital preservation than rapid growth. If you're looking for a company that can quietly generate cash and return a portion of it every year, FTCO fits that profile surprisingly well. With a dividend yield that has often ranged between 6% and 10%, Fortitude Gold can act as a hybrid holding, part gold exposure, and part income stock. For investors building a diversified portfolio, especially those who already hold growth names, a small position in a $120 million market cap miner like this can provide balance and downside protection when inflation or market uncertainty rises. On the other hand, this stock is not designed for short-term traders or momentum investors. If you're expecting a quick double or triple based on headlines, FTCO will likely feel slow and boring. But for patient investors who are comfortable collecting steady cash while holding exposure to gold prices around $1,900 per ounce, that boring quality can actually be the point. When you step back and look at the big picture, Fortitude Gold doesn't try to impress the market with grand narratives or aggressive growth targets. It operates a simple model: produce gold, control costs, generate cash, and return a meaningful share of that cash to shareholders. In a sector where many companies with market caps far above $1 billion still struggle to produce consistent free cash flow, FTCO has managed to do it with a valuation closer to $120 million. This company won't suddenly dominate the gold mining industry, and it probably won't be the most exciting stock in your portfolio. But excitement isn't the same as reliability. With gold prices holding near $1,900 to $2,000 per ounce, Fortitude Gold has shown that it can translate commodity prices into real income, quarter after quarter. So if you're looking for a stock that shouts about the future, this probably isn't it. But if you're looking for a company that quietly pays you in the present, Fortitude Gold is worth paying attention to.